Happy Friday, Canopy Growth traders and investors. It's Rod with Pow Group. Welcome back on the Pursuit of Wealth, your home for MJ stocks, crypto assets, news, and interviews. Also home to the best MJ community. As I mentioned, it's Friday, December 8th. Hope you're doing awesome. And in this video, we're going to dive into the Canopy Growth chart, specifically ticker symbol CGC on the NASDAQ. We're going to be doing some technical analysis. I'll give my thoughts and opinions on what to expect in terms of price action in the days, weeks, months ahead. I'll give some support and resistance levels that we're going to be watching, but the bulls are back with over 20% off of the low of yesterday to the high of the day today. So congrats to the bulls. Love to see it. Before we get to it though, make sure to smash the like, help support me in the channel. It doesn't cost you anything. If you're new, you can subscribe, tick the bell, all that good stuff, and you'll be notified on any future videos or when I go live. Also, to make sure that we can stay in contact with the community in case anything ever gets banned on any of these platforms, make sure to follow us on all platforms, and that includes X, which is formerly Twitter. The handle for that is @GroupPow. Going to be using that as my social media platform of choice going forward. And I also recently signed up for Odyssey, which is another content sharing platform, and Rumble as well, so you can give us a follow over there. But we'll take a look at CGC here at the moment. So there was a head and shoulders to at the end of the day here that we were looking at. Like I said, toward the end of the day, we have the left shoulder, the head, right shoulder, and there's a 15-minute bull flag, but it wasn't in a 15-minute uptrend, so we're not as confident in the 15-minute bull flag. Usually that's a bullish continuation pattern, and you want to be in an uptrend. So we were coming off 5-minute overbought, and we had this hidden bearish RSI divergence with lower highs, lower lows on the RSI and higher lows and higher highs on the price action. And now we could start to go the other way. And if you take the measured move here from your head and shoulders from the high to the neckline and then move it out to the neckline, it's saying we could be targeting about 76 cents here on a pullback into Monday. Keep in mind that the S&P 500 is very close to all-time high, but it hasn't started weekly consolidation now in a very long time. I think it's going on 7 weeks. So we are due for a pretty sizable pullback on the S&P 500, which will be headwinds, and that could happen really any week now. So we just continue to watch the low of each week on SPY the following week. So if on Monday we lose the low of this week, on Monday we start weekly consolidation, and we could expect a pretty big pullback and headwinds in MJ and on the CGC chart as well. We also have an EMA 12 and 26 bear cross, which is lining up here on the 5-minute time frame. So I'm in the camp of thinking we're probably going to pull back to around that 75 cent, 76 cent area into Monday, but definitely volatility returning in this stock and in this sector with a lot of catalysts on the horizon. There was a ton of catalysts there. I just did a video on this yesterday, but essentially Fed's released 250 plus pages of redacted documents for MJ rescheduling recommendation. Pretty much a nothing burger. We'll see what comes of it, but not expecting much. We'll see once we get actually a response from DEA, whether or not they approve it or not. That's going to be the most important catalyst going forward. And then there was also some news out with regards to some other reform. And then New York, also MJ MSOs got the okay to enter New York adult use market, and that is on December 29th. And then we also had a bipartisan MJ descheduling bill reintroduced in Congress, and then Ohio congressmen to file federal MJ legalization bill. So things are heating up, no pun intended, in the sector. And like I said, there's never been a better time to be in MJ in my opinion. The price is finally starting to catch up to the momentum and the fundamentals. And if we take a look at the 15-minute time frame here, so it is a 15-minute bull flag potentially, but like I said, generally we want to be in a bull flag. Or when we're looking for a bull flag, we want to be in a bull trend and an uptrend. Technically, we were no longer in a 15-minute downtrend because we had our high, low, lower high, and lower low. So once we broke resistance there at 78.6 cents, we were no longer in a downtrend on the 15-minute time frame. So the bulls have that going for them, but the trend is flat right now. We haven't confirmed a 15-minute uptrend with a higher low and higher high. So I'm not as confident in this 15-minute bull flag playing out, but in order to confirm the bull flag, we need to break resistance there at the high of the bounce at 80.63. If we break 80.63, then it's confirmed, and then we're targeting 85 cents. In order to negate the bull flag, we need to lose the 0.32 fib there at 0.7795. So if we lose 0.77, that is going to negate the odds of this bull flag playing out. But if we hold 0.77 and we break 80 cents, we'll call it 81 cents, then we'll be targeting just over 85 cents on CGC. So those are the support and resistance levels to be watching. And what we need to see for confirmation and invalidation, right? It's not about predicting or being right or wrong. It's just about looking at data and looking at support and resistance and monitoring it and seeing which confirmation or invalidation comes first, right? So that's what we'll be looking for on the 15-minute time frame. But if we zoom out here, not too concerned about the lower level time frames, but if we just zoom out here, and I'll get rid of some of this noise, if we just zoom out to the daily time frame, you can see off of the low of yesterday, we were up about 20% off of the low of yesterday. And then just over the last week or so, from the low there to the high, we're up almost 60%. So bulls are back for CGC and volatility. And we have resistance coming up. So we have key resistance here at 82 cents. And then we have a lack until $1 psychological, then 107, then 157, then 192. 192 is going to be the most important resistance because that is monthly resistance. And if we break that, we will be in a monthly uptrend for the first time since November of 2020. Okay, so it's been a long time coming. We also had this support trend line that we were respecting. And we have this type of Wyckoff accumulation pattern. So you can see here, we confirmed a daily downtrend with a lower high, lower low, lower high, lower low. Bit of an inverse head and shoulders here, but it didn't confirm, dropped to a new lower low, tested that support trend line, came down, formed a higher low and a higher high, daily uptrend confirmed, but then daily downtrend with a lower high, lower low, just choppy action. But we did gear up for an EMA 12 and 26 bull cross. It got close here on this daily uptrend confirming, but you can see here we had an upper wick and then we closed below it, and we were still a ways away before we could see those cross, right? So generally, the closer they get, the more bullish we get, right? And then sure enough, when the shorter period, the 12 period is below the 26 and they cross, that's bullish. You can see here whenever the 12 period, the shorter term is above the longer term, in this case the 26 period, when they cross, that's bearish and price go down. Whenever the yellow line is below the white line, the shorter term below the longer term, and they cross, that's bullish, price go up, right? So again, we weren't as confident here because we did confirm the daily uptrend, but we had that upper wick, and then the next candle we closed right below it, and then a couple of days later we closed right below it again, and we keep getting rejected heavily, but we kept coming down, forming nice support off of that support trend line, and then here was go time. So this is the bit of the Wyckoff accumulation pattern here, where we had that final dip down and then the spring, and we're looking really good here. This could be our nice temporary bottom here being set, and we had a nice double bottom there at 47 cents, and that was a nice entry as well. If you entered there with a stop below, if you enter at 47 cents and say set your stop below, you could have did 44 cents or 39 cents essentially, you could have risked maybe 10%, 10, 15% to make, you'd be up about 75%. So that's great risk to reward. So like I said, congrats to the bulls. We did have multiple daily inside bars. I mentioned this to POW group members as well a couple of days ago, that based on the size of this range, we had 82 cents to 63 cents was the size of that range on that daily candle, which was about 23% of range. And then we had a daily inside bar. I said the most likely scenario is a daily inside bar. And then I said to POW group private members that we're probably going to see another daily inside bar, and then sure enough we had that, and then you could have entered on a break of that daily inside bar breaking bullish, right? And if you would have entered just on that break of it breaking bullish, you'd be up over 10%. So that's a great example of support and resistance and how things are tightening up. And when we have daily inside bars, it just means that we're tightening up on lower level time frames, right? And that a break is likely imminent if we broke it support. So we had key support there at 67 cents, key resistance at 72. Once you broke 72, you could have entered bullish, or if we lost 67 cents, you could have went short and looked for a potential back test of this support trend line. But like I said, bulls won, and the next key resistance we're going to be looking at, if we can get over 82, then we've got basically nothing until $1 psychological, and then we'll be looking at 107 and then 157 and 192. Key support is going to be 52. We also have the support trend line there at around 51. So, but most important support is going to be 47 for me. Like I said, that double bottom. And then if we zoom out to the weekly time frame here as well, you can see we're gearing up for an EMA 12 and 26 bull cross. So what I've been saying about MJ is we need to see the whole sector do it. So Canadian names, US producers, Canadian producers, we need retailers and ETFs all in Canada and the US doing the same thing. And what those three things are confirming golden crosses with 50-day moving averages crossing above the 200-day moving average. So if we take a look at CGC, that's very close to happening, but it's going to be a while yet. Like I said, last time that happened was back in the when Dems took control of the Senate in November 2020. So it's been a long time coming. After we had that golden cross, price went to about 60, high 60s, and then right around $60. And then we had the death cross. Price went from about 25 bucks down to 34 cents. Now we're seeing another golden cross. So we're very close to seeing that happen. Realistically, could be over the next month or two. And then what we also need to see is weekly EMA 12 and 26 bull crosses, which again, that hasn't happened since November 2020. We're getting very close to that now. And if we take a look at EMA 26, it's at 79 cents, and we close the week at 80 cents. So if we can close next week, preferably 2 more candles over that 80 cents, then I think it's off to the races. And then if we take a look at the monthly time frame here, so we need to see that weekly EMA 12 and 26 bull cross as the second thing, and then we need monthly uptrend to confirm. So we're starting the monthly bounce now. We have our low, high, higher low, and double bottom there at 47 cents. And now we're starting the monthly bounce. It's all about 192. If we break that, we confirm a monthly uptrend. And then we still need the EMA 12 and 26 bull cross on the weekly. And then we need the golden cross. So CGC's kind of a laggard here. If we take a look at, let's take a look at a name like Cureleaf. So Cureleaf is what we would want to see all MJ do. So we have our low, high, higher low, and then it broke to a higher high, and then we had another double bottom here and starting the monthly bounce, but it's in a monthly uptrend. So CGC just did this with the higher low. Now we're starting the monthly bounce, and we're looking for the higher high. So it's looking to get this right here. And then if we zoom into the weekly time frame, you can see here we had the weekly EMA 12 and 26 bull cross. So that's 2 out of 3. And then if we bring up Cureleaf on the daily time frame here for the golden cross, you can see that it's already had its golden cross. So the more names that do this, the more confident we are in a bottom being set. And like I said, CGC is looking really, really good. We're seeing a bull cross of the stochastic. The MACD avoided a bear cross as well, but still a little skeptical there of this MACD having yet seen its bear cross when we just had one on the stochastic and lost the 10-week moving average. So again, the kicker is going to be SPY. So all eyes are going to be on the S&P 500 as well. If we lose the low on SPY, so let's take a look at that real quick here as well. And this is why you can't just be looking at one MJ stock. You got to be looking at the whole sector and then the broader market as well. So key support on the S&P 500, you can see since 409, we haven't started weekly consolidation, meaning losing the low of the previous weekly candle. And who would have thought we would go from 409 to all-time highs, basically, which is sitting at 467.13 without confirming a weekly uptrend. But this is just clear manipulation at its finest, and I've been calling for this for a while now, that we could see one more final blow off top before a massive multi-year bear market and one of the worst crashes in market history. Check out a video I did called How I'm Preparing for One of the Worst Crashes in Market History. But like I said, we are now going on 7 weeks now without any consolidation. So when it does occur, that's going to be a lot of headwinds and selling pressure on a lot of other sectors and names as well, and individual stocks, right? So key support is going to be 454.31 on the S&P 500 on Monday and next week. If we lose that, we start weekly consolidation, and that could be trouble for CGC and other MJ stocks and stock in general, because it'll be headwinds, right? Doesn't mean that we can't go against the grain, but it's definitely going to be adding some downward pressure. So that'll be something key to be watching for as well. And then we also have the 50 weekly there at 119, which if we can close over that, we've got some runway up to about 292. So things are starting to heat up, like I said, in the MJ space, and volatility is returning. And like I said, if we can see a couple weekly candle closes over 80 cents, I think there's a good chance we're heading up to that 192 resistance, which is key, because like I said, if we break that, we'll be in a monthly uptrend, the first time since November of 2022. So things are heating up. Like I said, this is looking really, really good. And that was a nice entry there on the 47-cent double bottom, starting the monthly bounce. And like I said, we still need that weekly EMA 12 and 26 bull cross, but we do have some other patterns to be watching. Like I said, that 15-minute bull flag, it's all about support and resistance. If we hold 77 cents, it still remains intact. And if we break resistance there at 80.6 cents, it confirms, and we're targeting 85. Okay, so we'll check back in on CGC in a few days, but congrats to the bulls who did buy the dip. And like I said, that was an amazing entry there at 47-cent double bottom while we were looking for that monthly higher low. Let me know in the comments below if you found this video helpful. If you did, smash the like. If you think I earned it today, share the video with your network. Hope you have a great weekend ahead, and we'll see you again on the next video. Take care.